Hey guys, and welcome back to the channel. Well, the stock markets have closed in new all-time highs. Bitcoin has closed up above key resistance levels with only a few grand left to go to get to our key signal of an overbalance in time and price, which could mean the tides are turning. The bottoms are in. Hold your horses. We'll get to that data and analysis in just a moment. But I also want to look at how this looks on the S&P 500, basically giving us that leading indicator for Bitcoin and cryptos through the next stage of the cycle. I'm also going to throw in a bit of a price target for the S&P 500 that is going to help with any sort of Bitcoin blow-off tops. So if you like the sound of that, which I think you do from the last video, absolutely went ballistic. Thanks again for hitting that like button. Let's go over 4,000 likes today and hit the subscribe if you are new to the channel. Each of these videos works upon the previous video. So if you're missing out on analysis, you are missing out on alpha. Hit the subscribe now. All right, let's kick it off with your home of macro cycle analysis. Bitcoin, cryptos, the stock markets, and the real estate cycle. You're joining me, Jason Pizzino. All right, let's start with the fear and greed. Looking at the S&P 500. I cover everything here because it is most important to understand the traditional markets, the financial landscape, so that we can see what's going on with Bitcoin and cryptos. Without a full grasp of what's going on out there, who knows what's going to happen with Bitcoin and cryptos. We essentially need to see more money coming in to the system in order for that money to flow out into Bitcoin and cryptos. At least that's my theory, and so far it has been doing relatively well. So the fear and greed index is back into greed for the stock market. Basically just ticked over the last couple of sessions. Otherwise, it's been trading around neutral. The thing I find very interesting about this, which also helps the cycle progress, which will help higher and higher prices, is that the greed or extreme greed that came in from December, lasted till, I'm calling it around 4th of March, until you started to see this drop off, that lower high, and then the sentiment really came crashing down into April and again in August. This period of greed had less of a gain on the S&P 500 than this period of fear, neutral, and extreme fear. So the majority of what you can see here has had more gain than this period here. It seems logical in hindsight. However, at the time, you would expect that because of how greedy the market is, you'd expect higher and higher prices for the stock market. However, the most gains have been had at this stage. And so I bring this up because the same thing happens for Bitcoin and cryptos. And as the title might suggest, we're looking at bottoms forming and more signs that the bottom is in. I like to look at it across multiple bottoms to give us a formation of consolidation and accumulation, which is confirmed once the market breaks out to higher prices. For example, the stock market. So it broke out to new all-time highs again. And so in terms of those percentages, as I just covered here with the greed area, and then basically the majority of this market sentiment was fear, extreme fear, and neutral, with a few little areas just above that to get into the greed. This is your reading here, 15%. So from this low to the current day, we just hit greed. So yeah, basically almost double the gains that the market had from when it was in greed. So think about that as what I think is going to happen, Bitcoin leading to higher prices, which is currently what's going on. So the S&P 500 closed at a new all-time high. Just 6 weeks ago, we were told there was another recession coming, like we were told 3 months earlier to that, like we were told 12 months earlier to that. Recession, recession, recession. It's over and over again, the same thing over and over again, which is why I talk about basically the same thing over again to the bullish side, because the market has actually gone up, which is how you make your money, how I make my money when the market goes up. I can't move these markets. There's way too much money in this. We know there's trillions and trillions of dollars in these markets. So whether I'm talking about it here or someone else is talking about it, we're not going to be moving these markets. Essentially, this is what's going on, and we're making money by the markets going up, not by listening to the fear porn that comes out every single hour of every single day from basically the majority of other people out there, analysis and so on and so forth. So the bottoms are forming. I think we can see that now. We didn't play out the same as last year. However, there was a seasonal pattern here of prices trending down and giving us turning points like we saw in August and again in September. However, this time was a higher low, whereas last year was lower lows and then lower highs. Now we've got higher highs. So it seems like things are really picking up pace, which is what we would expect, you guessed it, for the second half of the real estate cycle. So if you are new to the channel, which I know there is quite a few of you joining from this particular video, this is the main theory here, is that we're in a 18-year cycle over and over and over again throughout history. We're in this second half of the cycle right now, and to go down to a smaller time frame, we're in the winner's curse phase, which lasts roughly 2 years, and we might be somewhere in the first half or around the middle of this winner's curse phase. We've seen it happen over and over again. These are the rough years for the low points of each stage of the cycle. And you guessed it, we're timing this thing out to roughly 2025, 2026 for the real estate and economic cycle, with the stock market maybe trending a little higher late 2026, 2027, but we still have time to figure that out. So that's where we're at with the 18-year cycle. I just wanted to give a quick update or telling new viewers what we look at overall here, the 18-year cycle. So last video I did on Friday, basically just looked at many stock markets hitting new all-time highs. New all-time high after new all-time high. S&P, Dow Jones, India, Canada, Australia, Germany, and a couple of other markets which were close behind, UK and the NASDAQ, and then gold as well. Gold's also closed at another new all-time high, and many would believe that this is a signal that a recession is coming. You know, the market flees to gold as a safe haven. However, if you are in the know of your 18-year cycle, in the second half of the cycle, which is the end of the cycle or the end of the bull market, because the cycle continues into a peak and a collapse, a pretty long recession there. Let's have a look at my potential price targets here for the S&P 500. A little bit concerned putting this out there because people expect these prices to happen, and it is quite lofty. Like, it's pretty high up there. But what I want to look at here is another sign of the potential low and then the breakout. We're looking at the S&P 500, and these white arrows represent the election and where we currently are. So the up white arrow is the election week. So put one of those in, so the election week right there, and the down white arrows are where we currently sit. So let's go back into each of these, remembering, layering the 18-year cycle over this. You have periods where the market goes down, 2007 through to 2010. So the peak of the real estate cycle was around 2006. The stock market was 2007. And then the lows for real estate were around 2011/2012. And I know many were wondering, why don't you have that written here? Again, this is real estate in the economic cycle. There isn't like a bell that goes off at that exact point, but you start to see lows form around then, 2010, and then the higher lows around 2011, 2012, before you start to see the market really take off from that point. So there's no chart that tells you exactly when this low is, but you see signs that it's reversing. So back to my chart here with these the white arrows, looking at each of the election periods, and basically it's around a 6-week countdown now. We're in this week, 1, 2, 3, 4, 5, 6, and then in the beginning of that 7th week is when we have presidential election. 2020. Doesn't matter who's in. Hold your horses. I know that triggers some people. They want Trump. The others want Harris. I don't care. At the end of the day, it's not going to change the market, the pricing, what we're doing with our investments, because this overrides any president that gets into the White House. This is most important. The president isn't. However, for your own day-to-day livelihoods and what goes on in your communities, that's when you might be a little more concerned with who is voted in. Maybe you are Trump, maybe you are Harris. I don't know. It's entirely up to you. But for the sake of the market and analysis and investing, it doesn't matter. Yes, I've seen all of the data before that people say, well, it matters if the Democrats are in because it's been higher stock market prices, or it matters if the Republicans are in, it's higher stock market prices. It doesn't matter. This is the most important. You choose to use that or not. I understand that it can upset some. Moving back to the charts here, 6 weeks away, it can be a bit of a rocky ride leading into the election. So basically what I'm saying is volatility. Let's make it quick. 2020, volatility, market takes off, big boom times in 2020. Okay, here is the boom times straight up. Going back to 2016, Trump gets in, volatility into the election, boom times last until the end of 2017. That was a fantastic Bitcoin cycle, $200 from the low up to 20 grand in the highs. And you can see that a similar-ish uncertain pattern was forming throughout the last couple of years there, and then everything takes off after the election. Are things beginning to front run it now? That's very possible as we've head to a new all-time high. However, things might get clearer after the election as well. Maybe we push to a new all-time high and this sort of go sideways for the next few weeks. We'll wait and see and continue to follow up day to day here. Another sign, going back to 2012. This white line is the previous all-time high from the GFC, so 2007 peak. And what happened leading into it? Fresh highs. That's a pretty significant considering the backdrop was the GFC. Everyone thought this was the next GFC and this was the next GFC. This is when I started trading back in 2010. And so the sentiment there was we're heading to another GFC. And then the sentiment again was we're heading to another GFC. But it didn't happen. And then the markets basically broke out to new fresh all-time highs after that 2012 election. And in that case, it was Democrats. It was Obama in. But the same thing that we're seeing over and over again is volatility into the election and then a nice clean move out of the election. Now, I'm going to bring up one more because we could keep going throughout history here. But just to show here, that's the GFC. And leading into the election, huge volatility. Lehman Brothers collapses. There's the election. And the markets do trend lower. However, most of the move had already happened. This is when the media and the public think the collapse starts. But it actually started from here 12 months earlier. And then that was basically at the end of the move. So keep that in mind once we get to the end of the next collapse, or within the next collapse, right? In case this similar sort of thing happens again. There is 6 weeks before the election, collapse, and there's the election. That's basically 2008. So if you understand your cycle, well, you weren't expecting a new all-time high after the election, big moves, because you're at the end of the cycle. So it looks like, again, another bottom is forming. You've got the higher lows, higher lows, higher lows. Where are we now? Higher lows. So the market could correct here, but you've got two significant lows to watch. You have the 4950, call it 5,000, and then you have the 5,100 point low for the S&P 500. I've got price targets to have a look at, and Bitcoin also with more signs of the bottom forming here. But I want to recap this chart. Is the Bitcoin price in pink, S&P 500 in the bar chart. It has pushed to a new all-time high. 1, 2, 3, 4, 5 green weeks confirmed. We start the 6th week now, even though there's some pretty significant volatility in between there. 1, 2, 3, 4, 5. 5 green weeks. The point we're looking at here is the accumulation areas. It doesn't mean that Bitcoin can't push to a new all-time high. I'm just looking at these areas, the big yellow boxes behind, and the weeks, how long it's taken in that zone before you get to this clean sort of move by the S&P 500, which is essentially characterized in Bitcoin and crypto as the bull market. For my own sake, understanding the cycle using key rules, bull markets start from exact price lows and end at exact price tops. That way I can do analysis from those points. I'm not making up points about a bull market or a bear market. But for the sake of, I guess, what you feel and hear around the media, typically those parabolic bull markets or the blow off top areas basically start somewhere from around a breakout of a new all-time high. Yes, in this case, we did go to 74, but it seems like the Bitcoin price is actually consolidating above previous all-time highs when you look at a closing basis. So 2021, March and April, and then October and November of 2021, and to the current date, this is the pink area behind. That's what Bitcoin is doing, consolidating above the previous all-time high, which is actually very strong. It's a very strong sign of further higher prices to come. So accumulation, 22 weeks. Previous cycle, 24-ish weeks before this parabolic move. We are currently about to start the 23rd week for this accumulation zone. So I dare say it's coming up in quarter 4 for Bitcoin for a new all-time high. I will reserve the right to change that decision if we see signs of the weekly chart breaking down. But for now, many of the signs are pointing to a probable test or a new all-time high for quarter 4. Yeah, it could be, you could say it's a big gap. It's about 3 months. Let's wait and see if the rest of these signs continue to play out like they have done with previous cycles. I put this on the chart a long time ago, so it seems like it's all sort of following through. Shallow pullbacks on the S&P 500 as it breaks out to new all-time highs, and that basically leads to a Bitcoin pause or correction. I think Q4 is that party time. These little green ticks is the same thing here, Bitcoin pause or correction. So we see the Bitcoin new all-time high for the S&P, which is the bar chart. Bitcoin pauses, pretty significant pause and correction, runs to a new high, COVID happens, new all-time high, and then Bitcoin goes on its massive charge into the Bitcoin bull. Did it happen in the previous cycle around that, or just before the election time? That's the election week. Here is the green tick, so basically Bitcoin pause and or correction. It happens again. That's a Bitcoin pause and correction in 2016 election. Bam, Bitcoin bull market, big rocketing move. So that's 2017. And taking it back to the 2013 move, that is where Bitcoin basically pauses and corrects just before the fresh high. So 1 week before, pushes to the fresh high, correction, another fresh high, correction, and then nice clean moves for the S&P 500. Bitcoin parabolic bull market going from single digits, so roughly around, maybe it was $6, $10, maybe a couple digits there, 10 or 13, all the way up to $1,200. So looking at it on the side here, basically $1,100, $1,200 was the peak of 2013. So I think we've got some pretty significant upside for BTC, not without corrections that could scare the market away yet again. If the market sentiment runs to greed too quickly, well, you could possibly expect a correction to try and cool down the extreme greed, just like it happens every single time. Now, in terms of the lows, roughly around this 30 mark has shown other significant lows. I've got it on this Bitcoin chart here. And around this period of September has traditionally been a relatively good time to get into Bitcoin before the next move to the upside. It's not an exact science. I'm just looking at September as we close out the month, 7 more days, trading days to go for the end of the month. But if you can look at the chart down below, this is the Fear and Greed Index. September has generally been a pretty fearful time when you consider other months. This is the current September. August, obviously quite fearful, and July, also fearful. So any time in the last 3 months has basically been pretty good, provided it's been under that $60,000 level and you're buying up underneath sort of 26 or 40-ish level, basically extreme fear to fear on the Fear and Greed reading. September of 2023, fantastic opportunity. Market was quite fearful, and then give it another few weeks and it took off from that point. 2022, basically the bear market. September happened, October went sideways, November got us even lower prices, but the fear and greed remained relatively stable throughout that entire period, whether you're buying at 19 grand, 17 or 15 grand. Either way, when you look back on it, it was actually a pretty good time. However, you feel like a bit of an idiot for buying it here because you could get it even cheaper there. But nonetheless, when you look back, anything under 20 grand was an absolute steal for BTC. Next month, it is at the peak, the end of the bull market. September was also another fearful month, higher low around 40 grand, and it pushed to the final highs there at 69 grand. September of 2020 was a fantastic month to buy. It broke out, pulled back on top of those tops. So that's a very good, a really good signal for technical analysis. You got the breakout of resistance at roughly 10K, a retest on top of 10K in September with fear before it breaks out to new fresh highs. Going back to the next couple of months, 2019, not the greatest. So it's not a 100% tool, but either way, even if you were to be able to hold there, buying under $8,000, it still turned out to be a pretty good opportunity. And then finally, September in 2018, yes, it dropped in November and December, but you're buying around $6,400. If you had a little more there, great. Otherwise, that was the end of the bull market again. So if you're able to not buy in September in the bear market years, 2018 and 2022, and waited another couple of months, you basically had another opportunity to buy a little bit lower. Apart from that, if you're running up into the bull markets, they've generally been pretty good opportunities to get into Bitcoin again. So another sign of a possible low that will stick and the price doesn't come back to test those prices. Again, no 100% guarantees, but this is a pretty good sign of that. I still want to get to that S&P price target top as it's quite lofty, but I think I'll just finish off some of the Bitcoin analysis here. You're seeing the trend words die out, which is a good sign while the Bitcoin price is going up. So less interest, less people searching Bitcoin, yet the price is going up. So it's getting accumulated while it's quiet. People aren't searching it, therefore it's quiet. That's the way I read the market. You can obviously do you. And the price is going up. That's a good sign. So that's it for BTC, but I've got altcoins to get through as well. Now, before we get to those altcoins, a quick shout out to the channel sponsor, SwiftX. $20 of free BTC. Link is in the video description right here. I'm going to change that because it is $20 for Aussies and Kiwis. If you want to be trading the markets, check out TIA Premium and get yourself ready to go before the markets really do start to take off. And we are starting to see them take off for some of the altcoins, which is a fantastic segue into the altcoin market. So the true altcoin market cap here, because it excludes the stable coins as well as Bitcoin and ETH. Now, a couple of price targets that we're watching, make it nice and simple, around 480 billion, which is the 50% level, and then that swing top at around $510 billion. That would really start to cement this as being the bottom. And yeah, it lasted from July into that low in September. So basically 2 months of a bottoming pattern here and the spike outs above those levels. So I like to look at bottoms forming and tops forming, and they do take a fair bit of time. And then the time in between is basically volatility and pretty difficult to decide what's going on. But right now we're back above the April low, which is what I was looking at for a higher swing low forming. And the prices for some of the stronger alts are definitely above that level now, especially as we see the true altcoin market cap above that April low. So the two targets, 480 billion and 510 billion, before we lead into this Q4 run up and potential tipping point, like we saw in the previous cycle. That took about 100 weeks before you really start to see that market break away and break out of the tipping point tops. Where does 100 weeks leave us from the current cycle low in December? That runs out to basically December. So later Q4 for the altcoins, but maybe a little earlier for BTC, possibly October for those fresh prices. And then for the altcoins, potential break possible by Q4 or within Q4. And I'd say more around that late 2024. This is for the total market cap itself. And so you're starting to see some altcoins break a bit higher. ETH, definitely on the weaker side, but at least the week closed out above the 50% level. So that's actually a reasonably good sign for ETH now, as I left off last week, in last week's video, where ETH was starting to struggle here and it wasn't looking like it was about to close above it. That same day, closed above. That's a good sign. Next target is above $2,900 for ETH to continue on and potentially start to finally outperform BTC, as it hasn't been doing that at the moment. Solana, again, another good weekly close here above the 50% level, which means it's got about 13% to go to get above the $160. So that's the next weekly swing top, which would turn the charts up, turn the trend up, and start to show more signs of strength for Sol. Another quick look here, we'll do SUI. That's what you want to see. Well, I mean, this move has been pretty significant, pretty hard and fast, right? But if you can get onto it while you've got the higher lows, higher highs forming, and then the breakout, that's when you start to make that quick, fast money. And that's what we go through in great detail with TIA Premium, so that these folks, our members, are learning how to trade the markets here, getting into risk-free with profits locked in. That's the goal of every trader. Basically taking out enough money out of the market so that you don't risk your capital that you started with and you're making profits. So great work to Mr. Nice here. So that's SUI on the chart. Now, the last thing I was going to show is the price targets for the S&P 500. Drum roll, please. I'm going to go to a longer term time frame here, and I'm taking massive time price targets out for this market. So with that in mind, you ready? I'm going to turn on these, and we're just looking at extensions now. This is the first extension from the GFC low to the, this is the first cycle. So the first half of the real estate cycle. So low to high on the S&P 500. Projected from the COVID crash, and 50% was working. That was the extension here to 50%, 3,500 points. There was a rejection at 50%, and it just fell short of the 100% extension at 4,900 at that time. Came back, sat on top of 50%, and now it's taken off. So there are a couple of prices on the way up that I would use to determine whether this is going to continue to make it to that price target. For now, let's have a look at some of these price targets to the upside. It's hit the 100% of this entire range projected off the low. So that was 4,900 points. Now to 150 is around 6,300 points. The 200% level, which would be a doubling of this range off the low, takes it out to 7,600 points for the S&P. Note that the S&P is at 5,700 points. And so I bring this up because it's helpful for Bitcoin and cryptos. If you're still seeing this market carry on, like we've looked at with each of these blow-off moves, right? Every time the S&P goes on a nice clean run, you see Bitcoin also go on a pretty clean run as well. Doesn't mean that Bitcoin will run to the end of this run because it doesn't happen every time. Look at that peak there. That's January. Bitcoin topped in December, and it also kept running until September of 2018. Bitcoin was obviously down heavily there, and the S&P 500 ran to January 22, whereas Bitcoin topped in November 21. So there was a couple of months that Bitcoin was already starting to show signs of weakness. Nonetheless, that's the first number there. That's a 200% move of this range projected off the low. Now let's turn that one off and turn this one on. So we're looking at this entire range from the GFC low to the 2022 top projected off that low. Maybe put a little less weighting on this. However, we have seen a bit of a pause at 50%, so 5,600 points. The 100% move from this low now to the top is also at 7,600 points. So pretty interesting that two of these come together almost dead on the same number there at 7,600 points. So what does that look like in terms of a percentage from the current price? Is it completely ridiculous for it to hit 7,600? It's about 30, call it 33% from the current price. And if we do have another couple of years, what are we, 2024, maybe 18 months, 18 to 24 months, it doesn't seem that far-fetched to do 32% from now, considering October to now, 2 years, it's done 64% in a similar-ish time frame. So that's basically doing half the move compared to what the market's already done in about the same sort of time frame or slightly less. I'm going to keep that number in mind. The first couple of targets we're looking at is 61 for other reasons that we've covered here on the channel, just some shorter term targets. 63, psychological level, of course, being 7,000, and it hasn't even reached 6,000 yet, mind you. And then some lofty, crazy targets of 7,600 points. I'm going to put this on X, see how we go from there. But so far, the S&P 500 has been going pretty gangbusters to the upside, and it wouldn't surprise me over the next 12, 24 months, 1 to 2 years, if it is able to get to that particular price point. Getting to 6,000 and 7,000 is going to absolutely blow people's minds, I think. Like and subscribe. Links in the video description for our channel sponsor, SwiftX. $20 a free BTC for Aussies and Kiwis. Otherwise, I'll see you guys back here at the next video. Till then, take care and peace out.